Well, crude oil prices have hit their highest level since 2014. Brent crude has surged to over $81 a barrel. Now, this surge comes at the back of the latest round of meetings among the OPEC Plus group of the oil exporting countries, which has actually decided to stick with its earlier plan of only gradually increasing the oil supply in the month of November. Now, this decision has come in as a surprise to most of the sector watchers, as they were actually expecting a steeper increase, keeping in mind the rising demand for energy as businesses around the world have now resumed operations post the COVID-19 pandemic. Now, what is the background to this? The OPEC Plus group of countries had it back in April 2020 entered into a 2-year agreement which entailed steep cuts in the crude oil production to deal with the sharp fall in the price of crude oil as a result of the COVID-19 pandemic. Now, as we move towards more normalization of the economies across the world, oil prices have actually climbed up more than 50% in 2021. Now, this has led to exporting countries now thinking of gradually reducing those production cuts as well. What's also happening right now is that demand has bounced back quite swiftly, while supply has been disrupted by factors that includes hurricanes, which have also hampered the US production of crude oil. So what's the impact going to be on India then? Well, higher crude oil prices are a negative for Indian markets, as India is the world's third largest oil importer and also a consumer. India imports 85% of its crude oil needs and about half of its natural gas requirements as well. Now, India is running out of options as the relentless surge in the international crude oil prices makes it imperative for Indian oil companies to pass them on to the consumers. The record high prices of petrol and diesel have already become a pain for Indian consumers, as they have shot up above 100 rupees per litre mark in many states. Now, this continuing rise of the fuel prices will actually put more pressure on the centre as well as on the states to reduce the taxes on fuel to bring down the prices going forward. Now, at more than $80 a barrel, Brent crude is something that the country absolutely does not need right now. This level will also see fuel prices rise further, hurting consumers even more who are already dealing with a sharp spike in inflation. And India may also witness a widening of the fiscal deficit. Now, experts say that for every $10 increase in crude oil prices, there would also be a corresponding 10 basis points of an increase in fiscal deficit.